Thanks very much, Barry. So before I introduce myself, I might let everybody just give a quick introduction of who they are and where they're from before we get straight into it. So I'll just start with myself first, and maybe I'll pass on to Rachel and then to Alan and Jim. So I'm Stephen Mullan, Strategic Partnership Manager at Swoop Funding. I'll talk a bit more about Swoop and the partnership we've created with the IACC to support small business members. So I'll pass on to Rachel.
Yeah, hello everyone, and thanks for having us today. I'm Rachel Van Ketwich. I'm the head of R&D and grants at Grant Ready, and we work with businesses of all sizes across all sectors to help identify and apply for funding through grant programs.
And Alan, I think you're on mute there.
All right, there you go. Hi everyone. Proud Irish Australian here, co-founder of Birchal, which is a leading Australian equity crowdfunding platform. And yeah, I hope to chat a bit about the model and how it's been evolving in Australia. So that's me.
Okay, great. I'm Jim Ahern. I'm director of third party at Judo Bank. We're a commercial business bank, and we look after trading businesses, mostly do loans between 250,000 and 20 million. So trading business loans and commercial property investment.
Thanks, Jim. Thanks, Alan and Rachel. Well, we're going to go very quickly into a discussion around the latest trends in business loans and, as I said, equity investment and grants, which is why we've got our three participants here. But before we do, I just want to spend 1 minute talking about the Members Finance Finder that we have launched alongside the Irish Australian Chamber of Commerce. And I suppose as an Irish fintech company whose mission is to support small businesses, we've been absolutely delighted to be able to partner with the IACC to support their small business members in Australia, whether that they're Irish business people that have came over here, such as Alan, and started their own business, or Australian business members just based in Australia who see the great organisation that the Irish Australian Chamber of Commerce is. From a personal point of view, I'm absolutely ecstatic that we've been able to help members through the Irish Australian Chamber of Commerce Members Finder that we have designed. We've already been able to help Irish entrepreneurs get access to finance to allow them to continue to grow their businesses in this great country. And of course, the three partners that we've got here today across Grant Ready, Birchal, and Judo, they are key partners of Swoop and of the Irish Australian Chamber of Commerce Members Finance Finder. And you can find their services, which we'll go into in much more detail in a second, via the Members Finance Finder. So please keep that in mind. So yeah, before we go into our main discussion, I'll just let you know where you can find it, what is the Members Finance Finder and why you should use it. So if Barry could go on to the next slide there, we can get through it. So what is the Members Finance Finder? It's a fintech platform designed by an Irish fintech, as I mentioned ourselves, and what its aim is to allow businesses like any business owners or business entrepreneurs that are on the call today to find tailored finance options across the three areas of loans, equity investment, and grants. Crucially, these options are uniquely recommended based on your company's makeup and financial data, as you're able to input your banking accounts, cloud accounting software, and a number of other data points that you can input during the sign-up process. So that's what the Members Finance Finder is. You can also use it as an advisor as well. I know we've had a few advisors on the call. So if you're an accountant or a broker, you can come on, sign up your own account and add as many clients as you want and complete the journey to find and finance, and use it as a central portal to do all find all their finance needs. So that's what it is essentially. So Barry, if you move on to slide 2, we can tell people where you can find it. And I think Barry's going to very kindly input the URL of where you can actually find the Finance Finder. So if you're sitting here now and you have a finance need across loans, equity investment, or grants, yeah, I would encourage you to go on, sign up and check out the platform. Personally, I think it's a really cool platform. And really, really easy to use. So you can also find it on the homepage of the IACC, as you can see in the presentation here. So I would encourage you to go ahead, check it out. And if you do have a business need that you might want to speak to someone about, apart from signing up, we have a number of fundraising experts that you can speak to on the phone at any time to discuss any finance needs that you might have. So Barry, just last slide before we get on to the discussion. It's just a quick one of why people use the platform in a bit more detail. So once you've signed up, you can get matched relevant equity options across venture capitalists, family offices, or crowdfunders like Birchal and Ahern here. Or, for example, if you can see there for loans, you can get matched to commercial mortgages, you can get matched to invoice finance loans or unsecured secured lending, all of course based on your makeup of your company and the finances. So that's how we tailor it. And then the final area is of course grants. So we have been able to map out the business grant landscape via the platform across national, state, and local grants. So a really good example I like to use of why people should use us is we were very, very lucky to recently complete an equity fundraise for a company, a 3 million equity raise for a wealth tech company in Australia. They came to us originally. They were looking for unsecured debt. We spoke to them. We looked at their company information and said, listen, we know some family offices that specialize in this type of your type of company. Why don't we put you in touch and we can go down the equity finance route? And we were able to then do that. So as you can see, as I told, can be quite effective. So if you're an Irish Australian Chamber of Commerce member, please check out the Members Finance Finder via the link, or you can speak to us at any time. But that's my two pieces. That's my showbox. Let's move on to, of course, our main discussion. So if I could ask Barry to turn off the dreaded slideshow, which we all hate. But yeah, before we get in, if you have any questions, please put them into the Q&A box or the comment box, and Barry will get them out and delve them out to the participants after. So I suppose to kick off the discussion, I'm really, really excited to be speaking to Jim Ahern first. Jim Ahern's a director at Judo Bank, and he's going to give us his take on the business lending sector in Australia. So if you have any questions across that, please put them in the box. Of course, Judo have been hugely successful during COVID-19, and they've been really successfully disrupting the commercial bank sector in particular, and have lent huge amounts of money to SMEs across Australia. Which of course has led to quite a massive raise, 284 million raise for Judo. So it's a really exciting time for them. So I'm really happy that Jim's here. And so Jim, thanks very much for joining us.
No, thanks for having me.
I suppose one of the main questions I have for you and for everyone here, it would be good to find out, is what's happening in the business landscape at the minute. I know you're up at a very big conference there around business lending. Are you seeing a change in the industry, especially as we move away from COVID-19? And has some of the government stimulus packages or supports, have they worked for the business loan sector?
Yeah, so I'll just say that what we're seeing is there's a lot of optimism and activity out there by a lot of people in small and medium enterprise. So, they're out there borrowing, they're looking to do things, they're looking to grow, and almost everyone you talk to is busy, which is great. So it's good to see such good vibe. We've come out of this thing quite well, I think. All the doom and gloom we were worried about hasn't seemed to really hit. And if you had a good business before this, you most likely got through okay, and you'll be ready to go. So we're seeing a lot of activity and a lot of businesses looking to grow. Also, the consumers out there prior to Christmas, the banks were sitting on 3 times as much cash as they normally do. So everyone's got cash in the bank to spend. So that's good. And I think that'll be thrown into the economy and helping businesses grow. As far as the banking landscape, obviously during COVID, what was good for us was that all the big banks, as they tend to go back into their shells and be extremely conservative. We saw that as an opportunity and to judge a customer on their merits rather than just pulling it all together. We said, well, if this is a good business that we want to back, do we think they're going to come out of this okay? And if the answer is yes, we'll look after them anyway. So, but now that's all over and things are looking rosy. The banks in general and a lot of other funders are getting back into the market, becoming more aggressive in their credit appetite, which is good to see. So that'll help a lot of small businesses, and they're coming quite aggressive in their pricing too. So interest rates are getting cheaper and more competitive out there across the board. So that's good news for businesses as well. What you'll find is that because the banks have been sitting on so much cash, and they've got, there's a thing called the TFF, which is a $90 billion line of credit effectively given by the Reserve Bank to banks, which they can draw down at 10 basis points. They basically have to get money out the door, otherwise it costs them to hold it. So they've got to get it. They've got to get earning on it. So they're pretty keen to start lending, which I think they'll flow to the economy really well. And I think we're seeing the effects of that in the housing market, because people have got a bit of cash and their banks are willing to be aggressive at cheap pricing or really low rates. So as a result, housing pricing is booming, and we're starting to see the commercial property market recover quite significantly as well. Other things that we're seeing is the SMEG loans, or the SME guarantee loans. The first one was a bit of a disaster. The second one's been very helpful. The second one was quite good. That was very helpful for a lot of businesses, and particularly in the asset finance space. So people are out there spending a lot of money on equipment and machinery, and I think that's because of all the supply chain problems we had during COVID. And people wanting, I think it's going to mean there's going to be a big boom in manufacturing back here in Australia. So there's a lot of large equipment finance coming back into the market, and a lot of big manufacturing should return to Australia, I think, which is again is a good thing. So I think at the moment the biggest thing that will hold us back will probably be employment. Getting enough staff, or enough qualified staff if you have required skilled labour. And even in our own business, we're growing really quickly, and we're struggling to get people on quickly enough to, so we can maintain our service levels. But that's probably that's where we differentiate ourselves. The other areas I think that we're seeing a lot of activity in our business in particular is in the mergers and acquisition space. So there's a lot of businesses buying other businesses. So we're seeing a lot of that finance, particularly in the $1 million to $10 million range. And the big banks struggle in that smaller end because they like to have real estate security. So there's a lot of activity in that space out there, which is good. I mean, businesses are wanting to grow, and the people who are tired and want to go do something else are getting out. So I think that'll create a lot of opportunity and wealth for everyone. We're also seeing a lot of activity in the commercial property owner-occupied space. So a lot of people are buying their premises. Because rates are so low, you can actually probably borrow the money and buy a commercial property like a factory or whatever you need, and it'll be cheaper than paying the lease. So a lot of people are doing that, which is great. So that's what we're seeing out there. Yeah.
Thanks. That's a very comprehensive overview, and I did from my point of view, from working with some SMEs, I definitely agree with some of the things you talk about, especially with the first and the second guarantee scheme. The second one was a great improvement. And I know you talked about Judo's a very growing organisation, and maybe getting people. I hear a lot of people comparing, that you're disrupting, trying to get into amongst the big banks, but having grown exponentially over the last year, especially focusing razor sharply on the SME space. If any of the people that are on the call here today, they might be with a CBA and ANZ, one of the big four, one of the bigger banks, and they've always been there, and they might be thinking, I might give something else a go. What would you say would differentiate Judo from their approach to lending? And why are people moving away from the big four to you guys?
Look, I suppose Judo is started by people. Everyone at Judo is mostly out of the big bank, most of us anyway. And we're here because we got frustrated with how badly the banks treated our customers, our clients, and we think there's a better way to do it. So Judo, I might tell you why Judo is called Judo Bank. There's a strategy called the Judo Strategy. If you go to our website, there's a link there. You can read it if you can be bothered. And it's saying, well, you can't take a bigger opponent on head on. So you have to look what you can do better than they can. So if you look at the big banks, they're very industrialized in what they do. They've turned into a tick the box. It's not about understanding the client and helping them anymore. It's more around, this is our lending criteria, and either you meet it or you don't. And they're quite rigid. Now, in fairness to them, they probably need to do that because they're so big now, and they need to do that to control their risk. But we thought, well, and their service is terrible. That's the other thing. So, so they're rigid and they take months to do everything. So So we can't compete with them. They've got massive balance sheet, a huge presence, and they've got this huge product suite. So there's things that we can't compete with, but what we can be is more commercial, and we can be quicker.
Mm-hmm.
So we don't have rigid policies around loan to value ratios or interest cover or any of the other measures the banks might use. We make our decision based on the client, and we go through what we call the 4 C's of credit. So the character, who we're lending in money to, as I'd say, is this someone we want to bank? How are they going to pay it back? What equity do they have in their asset position or in the transaction or in their business? And the last thing we talk about is collateral, being real estate. So depending how strong they are, we might need real estate at all. So basically, we're more commercial and we're quicker.
Okay. No, and having been partners of yours, we're starting to see the way you operate in terms of dealing with customers. So, and I can attest to that. I did have another couple of questions for you, Jim, but maybe we'll come back to them at the end because we're going on a bit of time, or we're going over a bit of time. So I'll come back and we'll maybe ask some tips for SMEs in approaching lending at the end. But we'll move on now to grants. So we've talked a bit about loans, which is one fantastic way to grow your company. But probably from what we see in Swoop and from the IACC member finance finder, a lot of the interest we get is around business grants. How do I get business grants in Australia? What is the process? And we've got a fantastic speaker in Rachel here, who's years and years experience of helping Australians businesses achieve grants. Grant Ready have, of course, over 1,000 grants to be able to help you with on their database, and you can access many of those via the Swoop platform and the members Chambers Finance Finder, and of course they're tailored to your business makeup. But Rachel, I suppose the first question for you. Can you tell us about the changes you have seen in the grant space in the last 12 months? Are there different businesses applying for grants now, or generally, what are you seeing?
Yeah, it's been certainly a very interesting 12 months, as it has been across a range of different areas. I mean, initially, if we'd had this conversation 18 months ago, or probably less, 14 months ago, I would have expected that we'd be seeing some funding around climate initiatives, because we were just coming out of the bushfires at that stage. But things changed really, really quickly after that. And generally, we then use the May budget to give us a bit of an indicator of what priorities government has with respect to funding. And then we didn't even get that until October. So what we saw, particularly from March through to October last year, was a string of business support initiatives, really just to help keep businesses going through the pandemic. And when the budget did finally land in October, the support initiatives, again, was a lot of general business support through, tax incentives, extension to the instant asset write-off as an example. Jim already mentioned manufacturing and employment, and this is a trend we're seeing in grants. A lot of funding for manufacturing as the government's trying to seek to bring some capabilities onshore to Australia. And support does tend to also be linked to job creation. That's a trend we're seeing too. So for a business to be competitive for a grant, and this isn't all grants, but for a large portion of them, there is an expectation that it is going to result in some new jobs. So I think that's been the general sort of theme, has been a move. Initially through the pandemic, it was very much just let's keep businesses going, give them some support, and then a focus then on the areas where they think that they can really stimulate the economy.
Okay. No, definitely. I would agree with that from the people that are coming to Swoop, looking at grants as well. Manufacturing, very, very popular. In terms of the where can businesses find access to grant information? Obviously, you can find it through the members finance finder. We encourage you to do that. But more importantly, once they found this information, how do they go through the process of finding, or of applying for the grant? What advice would you give to them for the process of applying for the grant?
Yeah, I mean, at any point in time, there can be over 1,000 different programs out there, which is pretty crazy when you think about it. And you mentioned previously in your intro around that can be local, state, federal government level, and also through some private philanthropic organisations. And look, sometimes we get up to 20 to 30 grants opening and closing every week. So it's a constantly moving and evolving thing. So it is important to be across these. and make sure that you're aware of what's available and when it's available. Otherwise, you know, you might suddenly have this project and think, great, this is a great project. Let's see if there's a grant. And oh no, there was a grant a month ago. So yeah, I think it's important to keep track of them. Obviously, the Finance Finder is a great starting point to find out what's available and tailored to your needs. That's powered by our other product, Grant Guru, which is a comprehensive list of all of those grants that you can search and keep track of different grants opportunities as well. And what we're seeing is that businesses are being a bit more strategic and more open to funding at the moment for grants, because they are sort of seeking, you know, that sort of, well, how else can we sort of get some funding into the business without, I suppose, diluting equity dilution or anything like that. So yeah, we are seeing businesses being a bit more savvy, being strategic, and so using these tools to really keep on top of what's out there. And we're even seeing often investors are even expecting that businesses go through the process of seeing what else is out there, so they can get a better bang for their buck on their investment with some government support. And then in terms of, you know, how that next step works, so all right, we found a grant, we might be eligible. I think it's really important. Again, we've talked about being strategic, but also understanding that no matter how much you push and twist, you're never going to be able to fit a square into a round hole. So I think it's really important to be realistic around your eligibility. So sort of having a look at what the eligibility requirements are and making sure you are eligible. And then having a look at what's your chance of success. So being honest about, okay, you know, what's the government trying to achieve with this funding, and am I going to meet that requirement? And that's the honest conversation we would have with anyone we're engaging with, is really be honest about, well, A, are you eligible, and B, do you actually have a really good chance of getting some funding under this program? We hear it so often, the stories about the grants that your mate got or your competitor got, and you want to know, oh, hey, they got that money. How do I get my hands on that money? So I think it's really important to understand that just because someone else got a grant, it doesn't necessarily mean that you're going to be eligible, or that funding may have come and gone. That might be an old program that doesn't exist anymore. So that again sort of highlights being strategic and keeping track of what's available, so you don't miss out, and yeah, and keeping track of what the requirements are for those.
Yeah, and just, I know we're conscious of the time, Rachel, but could you give us 30 seconds? Could you name three or four of the most, I suppose, popular grants or people should watch out for at the minute?
Yeah, so I mean, when we think of grants, we think of generally of non-dilutive funding opportunities. The most popular programs are the ones that have been around for a long time and are always around. So things like the R&D tax incentive, the Export Market Development Grant. But then we are seeing the popular one at the moment was the Manufacturing Modernisation Initiative, so MMI. The government's invested $1.3 billion into that program. And we're just starting to see as well some similar state programs coming through. Victoria just last week announced a manufacturing grant as well. And we're also seeing a trend back towards vouchers in some states as well. So not necessarily cash, but vouchers to be able to use to get some services to help businesses with a project.
Thanks very much for that quick synopsis. Thanks, Rachel. So we'll move on to Alan. We had to save, of course, our token Irish participant on the panel for last. Alan is the CEO of Birchal. Birchal are the largest and most experienced crowdfunding platform in Australia, and they recently reported that, having finished 2020, they hosted 70% of all crowdfunding deals, 35 in total, raising approximately 68% of all total funds raised in crowdfunding, which is over 20 million, which means that Q4 last year was the most successful and biggest quarter for the crowdfunding sector in Australia. So it's great to have Alan here to give us his insights on investing. So Alan, just to start us off, for some of the participants who might not be very familiar with equity investing, could you explain Birchal and how crowdfunding differs from other types of equity investment?
Yeah, thanks, Stephen. Just quickly, so Birchal was fortunate back 3 years ago to get a license to be able to facilitate the capital raising process online. This was a change that was pretty much being in the pipeline for probably 5 years prior to it. And the regulator, IACC, licensed 7 platforms back in November 2018 to provide like an online service for companies, particularly private companies, a way to market and advertise the fact that they're open for investment, and then secondly, facilitating investment from retail investors, and accepting potentially unlimited numbers of retail investments into their business as well through issuing shares in their business. So unlike debt and grants that we've heard of, this is a dilutive way to raise capital, but it can be, particularly if you're the right companies, a very effective and efficient way to raise capital into the business and meet some maybe the criteria that some of the grants require, and potentially some of the security or I suppose the balance sheet that maybe some of the debt providers may look to evaluate. So equity crowdfunding, as I mentioned, has been it's pretty new in Australia. It's pretty popular internationally, particularly in the UK. It's been around for probably 8-9 years now. So, but yeah, we've pretty much built the platform, the online platform, to facilitate and host these deals, and yeah, be the hopefully the industry leader in the market for this as well.
Yeah, definitely. And in terms of the investment landscape in general, what trends are you seeing over the last year? Is there more investment flows now in general, and obviously in crowdfunding?
Yeah, so last year, like Rachel mentioned, the start of the year was the bushfires, and for us, particularly going into COVID, like the marketability and being able to promote and market these investment opportunities more widely, particularly to retail investors, was particularly challenging. Like we use social media, we use PR, we use all of the key channels that particularly any online business would use to market these deals. So it was particularly challenging at that time, and we had a really strong pipeline of companies looking to raise. But like for quite a few of them, the perception or even the reality was that these businesses will be tremendously disrupted by what happened last year. Outside of that, a lot of companies may have decided this just wasn't the right time, even though they weren't significantly impacted. It wasn't probably the right time, and that made a big dent in terms of the progression and also the momentum that was building with the equity crowdfunding. However, as soon as July hit, like we definitely seen a tremendous turnaround, particularly in the investment space where typically we were seeing in the first half, it was mainly just retail investors engaging in our deals. That turned around pretty quickly, July, August, and we've seen that wholesale investment was back. Average investment per investor was increasing again. Wholesale was a big part of that, but I think there was a lot more confidence in investing in companies that weren't so badly affected by what's going on. So, and as you can see, like tech businesses, online businesses, many of these here industries have really pushed ahead, and actually have advanced much more during this process, or like during the last year, than would probably have been typically achieved. So, but yeah, we're seeing things back to normalize it, and to be honest, in a similar way to what Jim was mentioning, like confidence is really strong, and there's very ambitious founders looking for capital and using equity crowdfunding as an efficient way to raise that.
Thanks, Alan. And just one very quick last question before we move into the Q&A. Could you give us one or two very quick bits of advice you would give to any founders, any business owners who are on the call right now who might be looking at investing and crowdfunding? What should they do?
So, like as I mentioned, there is the marketing aspect of things, and that's one of the key success factors for equity-based crowdfunding more generally. So, think carefully about who the audience is that you're targeting for investment. Think about what channels to use effectively to get access to them, investors. And when I say investors, we're talking about anyone, actually, because like we're really, with equity crowdfunding, making it very accessible to anyone to invest, and they can invest, like as a retail investor, up to $10,000. So generally think about the audience, think about your business model particularly, because like you're explaining to retail investors in sometimes simple form what the business does and what the business model is. So how it will resonate, what's the emotive way to market your investment offer, and building that engagement, particularly online. So, but I can maybe talk to that in a bit more detail at the Q&A.
Okay. Well, that's the a bit of discussion part of the webinar. I might pass back to Barry for he wants to do the Q&A here and grill everybody on the latest trends. So Barry, I'll pass back to you.
Thanks, Stephen. Feel free to send questions through on the chat or the Q&A, folks. I've got a few questions that arrived earlier, and as I have predicted, got a couple of people on the call who've got my mobile number have been texting me some questions as well. Yeah. But one of our early questions was there was sort of two that are almost due to be answered the same way around early stage businesses. What is the right vehicle to incorporate under, and then subsequently for those early stage businesses making an approach to you know, a funder with, you know, maybe only a year of accounts behind them and whatever, you know, are they wasting their time? Are there opportunities, whatever? So whoever's happiest to deal with the young companies, go ahead.
I can jump in. I'll make some comments from a grants perspective. There are often different types of entities that can apply for grants, but most likely a incorporated entity is generally one of the eligibility criteria for a lot of grants. In terms of being early stage and having a bit of history behind you, the government is quite risk averse. So they do look at grants as an investment that they do want to de-risk where possible. So that's not to say that it would make you ineligible, but sometimes they do ask for financial history to get an understanding of viability before they would see whether or not you'd be competitive for a grant. But there are some grants that are specifically targeted to startups, to early stage, so that would factor in that you might not have some of that history. But generally speaking, look, there is often or sometimes a requirement to be able to show a bit of history there.
Okay, thank you. Anyone else want to jump in on the young companies?
I can jump in. Yeah, I can jump in quickly. Yeah, actually, the eligibility actually for equity crowdfunding is you need to be a PTY limited company or a limited company. So traditionally, you would see companies setting themselves up as proprietary limited companies because there's less governance responsibilities, but it is open only for them to entity structures. So, and that's probably the most common, I must say.
So if you're you know, if you're well asset backed and very experienced, but you've only been going for 12 months and you've got some financials, you can demonstrate servicing, then that shouldn't be too much of a drama for most lenders. They may want security, and if maybe you're not so well asset backed, but you have a great business and you're growing really well and need a bit of cash flow, there are plenty of lenders out there. At this conference that I'm at, there must be at least, I reckon there's 15 other lenders that specialize in cash flow for small business. So, you know, speak to Swoop or your broker or whoever you deal with, and they'll sort you out with them. They may be a bit expensive, but they'll definitely get you through your growth phase up to the point where you know, you can get cheaper money out of the big bank.
Thanks, Jim. We've had an absolutely fantastic question in from one of our advisors. Stephen, this is going to test your skills here. And I see there are quite a few advisors on the call from Sydney, Melbourne, over to Perth as well. So we're getting good traction today. How can advisors get a competitive advantage for their clients through the use of the Swoop platform that we've set up?
Yeah, I'm delighted you asked that question, Bar, because advisors get the most value out of using Swoop by a long way. Just to give you an idea, Swoop in the UK, where it's our biggest market, where we've had about 60,000 clients on the go at the minute, our revenue from whatever we do for every finance we provide, 40% is made up of that is from advisors, and advisors account for less than 5% of total accounts. So as you can see, they get a huge benefit out of using us. Why is that? The reason for that is they can come on, you can sign up your practice, you can then plug in your practice accountancy software package. So you're Nexia, or one of the big firms up here, or a smaller firm, you'll have all your clients on your accounting cloud software. You can come on, create your practice, add your client each individually, and connect their accounting practice software to that client. You can do that to as many clients as you want and use that as a CRM and connect up the accounting software. Why is that important? Because when you connect up your accounting software of your clients, that does a lot of the analysis on the app, or enters a lot of the information in the application form which you need to get finance for your client. So if you connect up your MyUp, for example, we can then have a razor sharp analysis using our matching system and using the information you tell us about the client. So what sector they're in, how much money they're looking for, what guarantees can they put up, and then having their 12 months of statements of bank flow, of profits, of assets. Using that information, we can then say, bang, Judo is by far the best lender for your client. So they could maybe looking for unsecured. They could be maybe a startup. They don't want to. They might want the money very quickly. We can take all that into account and say Judo's the one for you, and you do that without entering a lot of information. Whereas you might be an advisor. You might be sitting somewhere in Perth. You might have 4 different lenders that you've used for 50 years, and you always use them. But there's a whole range of other lenders out there. For example, we're using loans again here. So we have 45 different lenders on our platform across banks like Judo, across alternative finance providers. So you're just opening up the amount of products that you can provide for your client, and you can use the information they have, or you have them ready to do that. And that's the same across loans. That's the same across equity investments. So again, we can make recommendations, whether it's crowdfunding, a family office, which I mentioned, or a particular VC in a sector, or through grants, because we know from the information you can plug in via their cloud accounting software and their ABN and the other information. You can say there's a local regional grant in Victoria for manufacturing, and you have that once you come onto the platform and add it for that client. And now if you replicate that across 20 clients and have it all stored one central place, it's much easier for you to end of year reviews to say, this is your profits, this is what I have in assets, but here's a grant in Victoria, here's a VC that you should speak to, here's a loan through Judo that you should be able to do. So that's hopefully the answer to the question. And of course, you can find that by signing up as an advisor to the Members Finance Finder now. Or if you want to speak to me personally about your clients, and we can go through a demo and bulk upload them if you wish, or just answer any questions you might have.
Thanks, Stephen. There was a supplementary question around the sort of time saving that would be yielded through the platform, but I gather from your answer that it's the speed to be able to respond to your clients with something that's close to application stage, as opposed to a long lead time before you can actually talk turkey with them.
Yeah, and what also underpins the whole platform is the brokers. So you put through the application form for a grant, or for looking for an equity investment or a loan. Our brokers and fundraising managers will assess that. They'll package up the information, send it over to a lender in the way that the lenders told us that they want it. So make it much easier than doing it yourself. And that's the same for if any advisors are on here, brokers. The exact same journey. You can put in the information of your clients and you can get those tailored options. So yeah, we try and make it as easy as possible through the technology platform to find the options, but also through our experts who can speak to you, reassure you, package the financial information, and actually manage the relationship with the lender through to the final stage of application.
Okay, Alan, I've got a question that I'll save his blushes by not naming a mate of mine who's joined the call. I had a question around what type of companies do well in a crowdfunding environment. You know, is it size based? Is it for purpose? How do they really catch fire?
Yeah, so like this is like I generally look to evaluate lots of businesses that come to look at equity crowdfunding as a funding channel. I think, firstly, I think the most relevant companies that tend to nearly always do better are consumer-based businesses, so the B2C businesses. You also have like marketplaces, online marketplaces, digital kind of platforms. These tend to do slightly better than normal because you generally are using these like the digital channels, or potentially following the fan base or the customer base as potentially the initial channel to get that initial interest for investment. In terms of stage, like we've hosted many very early stage businesses. Like even more recently, like one of our biggest successes has been a disruptor bank for small businesses. They raised 3 million pre-product. So that's a very early stage business. It also went against the norm, being a B2B play as well, but generally it is a disruptor in the digital space, and in an industry where there's lots of professionals, I think that kind of know or are a very dedicated audience that you could lean to get that interest built and follow our process. And maybe I should even talk to the process more generally as well, quickly as well, because like we generally work to a very finite process of 9 to 10 weeks. And in the early stage, it's very much about marketing and testing channels to acquire investors. So even the initial phase, we look at digital marketing, we look at PR, we look at our comm strategy, and we aim to build a list of interests well ahead of actually opening up an offer. And opening up the offer, again, is quite strategic in the way that we do it as well, because we want to build momentum. We want key targets to be met early so that we have a compelling message and hopefully creating a lot of word of mouth around the offer as well. So if you know that you've got a large audience of people that you think would resonate or be able to engage with it, particularly in the early stage, we can leverage that and hopefully get a deal done. Okay.
I had one more question, which I'm going to prevail on Stephen to ask him, because it's one that has come up a few times in conversations with me. I know we're 3 minutes over time. I'll plead the fact that Zoom kicked me out and then let me come in late as my rationale. But Stephen, a few people have asked me around the time from a go to woe on the Swoop platform, around them getting their application in, identifying a product, and then actually being able to draw down. Does the platform make that a bit more streamlined? And if so, what does that look like?
Yeah, it's so to answer your question, but it does depend on the type of product someone's looking for. If they're looking for a crowd investment, it's going to take a number of months to get the ducks in a row for that. And the same for some of the grants, like R&D grants, that can quite long processes. There's a lot of planning, a lot of going back and forth, putting together business plans. But I think you're asking more about business loans there in general. And again, it is down to the product. So if you're going for a large commercial loan to buy a premises, one we're doing at the minute for, I think it's 8 million. There's a lot of due diligence there from some of the lenders, because it's just a big project and they need to take in all the variables. But if we take, for example, one of the recent loans we completed through the Members Finance Finder, it was for a cash flow loan. It came to us on a Thursday. It was for $200,000. The Thursday they signed up to the platform. We spoke to them. We collated the required documents, and the person we then passed it over to the relevant lender based on their company makeup. That was on Friday. On the Monday, the lender spoke with the client, bit of due diligence, and they were able to draw down on Tuesday morning. So they were able to do that because they signed up the platform. They got recommendations which were appropriate to their company makeup. We were then able to intercept that, speak to the client, pull together the documents very easily through the digital downloads you can do on the platform, and send it across. So very quickly for some, but some of the others, like commercial mortgages, we work very, very closely, and some of the equity raises very, very closely getting to know the business, getting to know the plan. Yeah, so it does vary, but the whole point of the platform is to make it as easy and quick as possible.
All right. Thank you very much, Stephen. We're 5 minutes over time. I know we wanted to make sure people could do this during their lunch break. So thanks very much for everyone who took part today. To our panelists, thank you for sharing your knowledge. I'm sure we'll hear some more from you. What we'll do is, rather than delay things by popping up the slide with people's contact details, we'll just send an email out to those who took part today, just with all of those contacts on them to remind you who it is that you need to speak to. Otherwise, have a great afternoon, and we'll see you next time. Thanks.